almost everyone bought their first crypto asset on a centralized exchange. And it's only after they became acquainted with it that they then moved to self-custody, to operating in a DeFi space. The market has been suppressed so long from a regulatory perspective that anything that has had that lid come off, whether it's ICOs, IPOs, M&A, etc., you're going to get more than normal activity in the next year.
As crypto matures and it's become more affected by the macro, it's probably going to break some of these 4-year cycles and things we've known, legacy mindsets, right? And it's going to act a bit different.
Yeah, absolutely.
This episode is brought to you by Propy, which is leading the charge in putting real estate on chain. Propy is a game changer. You can buy and sell real estate with cryptocurrencies using the Propy platform, which is powered by a blockchain, of course, and they have a native token called Pro. And I've been an investor in the Propy token since 2018. So Propy is a licensed Web3 pioneer operating since 2017. They have facilitated over $4 billion in transactions. They're putting titles and deeds on chain. They use Coinbase for their crypto escrow service. So this is a great platform. And once again, they are ahead of the curve when it comes to putting real estate on chain. And they just launched a great campaign where you can earn some of the Propy tokens. And it's simply by doing tasks such as sharing their vision video, signing up and inviting a friend, and much more. So if you'd like to learn more about Propy, visit the link in the description. Hey folks, welcome into the Thinking Crypto podcast. I'm your host, Tony Edward, and joining me is Matt Hougan, who is the Chief Investment Officer at Bitwise Asset Management. Matt, great to see you.
Tony, it's so great to be here. Good to see you.
Yeah, Matt, exciting times for Bitwise. Over the past, we're recording on Wednesday, November 26th. The Dogecoin ETF is live, but over the past couple of weeks, we've seen the XRP and the BSOL, Solana staking ETFs. So exciting times. Tell us a bit about these products and the launches that we've seen so far.
Yeah, we're really thrilled to be in the moment that we're in. We're finally working with regulators. We're able to launch ETPs on the best crypto assets in the world. We're sort of moving, down the list from largest to smallest. It's not a direct step because there's some that can move faster than others. But of course, we all started with Bitcoin and ETH, and those came out in 2024. And now, we've been really excited to launch the first physical Solana staking ETP, stakes 100% of its assets, which is pretty exciting. And then follow that up with our XRP ETF. Love the pill in the background. Good work with the great ticker XRP. Really excited about that. And then, of course, Dogecoin, a community-led initiative with enormous staying power, a fair public launch. Really excited to get that out into the market as well. There are additional ones coming, but we're starting to work through the biggies. And the most exciting thing to me has been the response has been absolutely amazing. I think the Solana ETF has had inflows every day since it launched, which was before Halloween. That's an incredible stretch for an ETF. The XRP ETF has had strong inflows as well. And the Doge ETF is off to a good trading first day. We won't know if they're inflows until the end of today. So 3 more hours to go. We'll see. But so far, the response has been really strong.
Man, everybody wants to know, how did you get the XRP ticker symbol? That's prime real estate right there.
All credit goes to Hunter Horsley. Our CEO at Bitwise, a few years ago, you have to reserve these tickers. So you have to petition the New York Stock Exchange or NASDAQ that you want to reserve these tickers, that you're planning to launch an ETF related to that ticker. And then you have to prove that you're planning to do that. You have to show momentum in that direction. And we looked back in our archive. It was a few years ago. Hunter told Teddy that we wanted to reserve this because we knew we were marching in the direction of XRP. So really excited to have that ticker. The ticker's not everything, but it's an important thing. And obviously that is the iconic ticker. So it was great to have that for launch.
Oh, absolutely. Let's talk about the BSOL because I'm fascinated by the staking component. I think that's huge. A lot of people are looking to have the yield, the passive rewards earned as they hold the asset. So will the rewards be continually reinvested or paid out in different ways?
Yeah, that's exactly right. They'll be continually reinvested over time. So over time, you would expect this ETF to outperform the direct price of Solana, right? Because the Solana price doesn't include those rewards. It's targeting, there's something like a 7% yield available in Solana at this moment. So over time, that's the kind of internalized reward you would expect to see built into this ETF.
As far as the generic listing standards from the SEC, has that made it easy for you to launch these products?
It's definitely made it a lot easier and will in particular make it easier going forward. So it created a set of assets for people who aren't aware. Before the SEC put in place these generic listing standards or GLS, you had to petition each asset and get special permission to do that. They had to create what's called a rule exemption that would allow you to launch. So you had to prove so many things about each particular asset. It was a long, drawn out process. A lot of lawyers made a lot of money. The beauty of generic listing standards is as long as you fit a certain criteria, which is basically, is there a derivatives contract trading on a regulated futures exchange, or does it meet a few other qualifications? Then you can proceed to launch in an ETF format. It's opened the doorway to get through the first, dozen or so largest crypto assets. Not everyone. There's some that don't meet the criteria, but many do. And you're going to see Bitwise and others roll those out over time because now we can.
Mm. And then I imagine over time, you're also going to have more index or basket ETFs. So let's say all staking, proof of stake blockchains that earn these yields like Ethereum, Solana, and others. And then maybe other categories like meme coins or whatever it may be.
That's exactly right. I actually think that's going to be slowly, not tomorrow, but over time will become the biggest category of these ETFs.
Mm.
Right now, when you launch a Solana staking ETF, the first people who buy it are people who know what Solana is. They may have an opinion about Solana versus Ethereum versus other blockchains. They may have been following the community for a while. They're certainly familiar with tokenization and stablecoins and the drivers of Solana. Maybe they even know its technical roadmap. But over the next 5 years, you have to think that the average person coming into crypto doesn't have that knowledge. In the same way, I don't have that knowledge about, which AI company or which quantum company or which biotech company is particularly well oriented, but I may want exposure to AI or quantum or biotech. The same will be true in crypto. Maybe you want exposure, as you said, to staked assets that provide a staking yield. Maybe you want exposure to assets that are linked to the growth of the stablecoin market. And so groups of those in index products, I think are going to be a really big theme in 2026. It's an area we're focusing a lot on at Bitwise.
Yeah, the staking component aspect is very appealing to me to have that basket because I personally, being an early adopter of crypto, stake Cardano, Algorand, Solana, Ethereum. They're all running, earning the rewards. But to your point, as a newbie, a crypto, newbie, curious person, if I can just get access to that and have that yield and it's outperforming the price and it's all those major staking assets, that's really appealing.
Yeah, it's really appealing. And the beauty of an ETF structure is you can do that at institutional level, right?
Mm.
So you know that you have an ETF provider, whether it's Bitwise or someone else, that hopefully is evaluating all the available approaches to staking, ensuring that they're best of class, monitoring it on an ongoing basis. The goal of ETFs, is you want to summarize what they're trying to do, is to provide an easy button for traditional investors to allocate into crypto. And that, to me, includes staking, right? Because as you said, you've been doing it for years. You, of course, want the staking yield. You know that's an important component of returns. ETFs are designed to make that very easy for everyone, even people who are not crypto experts, to gain access to that pattern of returns.
Yeah, I feel like that's just going to be a huge game changer and just allow more people to get into the asset class and on board. And, maybe the ETFs are their first base. They get comfortable, they watch it for 6 months, it's growing, and then they want to go more into Web3 and they can become more of a degen if they want.
That's right. Exactly right. We all start somewhere. I tell people that all the time. If they think back to the first time they bought crypto, chances are they bought Bitcoin, right? Maybe they bought ETH. But a lot of people don't stop there. And I think that's what you're going to see here, right? This is bringing people into the crypto ecosystem. There is one criticism that I'm sure you've heard of ETFs, Tony, which is, are they like anti-crypto? It's supposed to be this decentralizing force, and ETFs are a centralized entity, like a traditional finance entity. But I think that overlooks what you were pointing to, which is for many, it will just be their entry into the market. And then they'll go on to do more native things. The analogy I always remind people of is almost everyone bought their first crypto asset on a centralized exchange. Almost everyone did that. And it's only after they did that and became acquainted with it that they then moved to self-custody, that they then moved to operating in a DeFi space. You need that easy entry point. ETFs are just another easy entry point. Not everyone will stop there. A lot of people will go there to more crypto native approaches to the market as well.
You're absolutely right, Matt, because I literally talk to family members and friends who are now, they're like, hey, I'm hearing a lot about Bitcoin and crypto. Tell me how I should get involved or how I should buy. And one of the things I've been telling them is, if you don't understand what Coinbase is or these other exchanges, just go to your broker or whatever you're using to invest in stocks and you'll see the ETFs now. And that could be a great way for you to participate because sometimes I tell people, hey, there are these things called exchanges. You can go sign up and you KYC and all that. And they're like, huh? Like what? But you say ETFs, they know about ETFs.
It's so true. I mean, think about, for crypto native people, think about that in any other area of your life, right? If someone told you, oh, you had to create a new account somewhere before you could do something versus just like go into Coinbase and you can do it or go into your crypto wallet and do it. Of course, it's easier. Humans are lazy. If there's friction, they won't do it. So all ETFs are doing is making it easy for a group of non-crypto native investors to gain exposure to this exciting asset class.
Oh, absolutely. Now, just recently, I saw Hunter Horsey posted on X and he tagged you that you guys spoke to, I believe it's 2,000 plus advisors. You had a call and one of a large US bank, and they want to know more about Bitcoin and crypto. What can you tell us there as far as demand that you're seeing?
Yeah, it's absolutely really significant. I mean, it's worth remembering that even though Bitcoin ETFs launched in January of 2024, it's still the case that most wealth managers have not allocated. Most of them are still studying of it. Some of them haven't been able to allocate until the last few months. We think 2026 is going to be the year when you see large national account platforms, the major broker dealers out there that manage trillions of dollars of assets, start to put crypto into standard portfolios alongside stocks and bonds. So I think we've just sort of touched the surface of the demand that we're going to see in this market. I mean, that was an incredible call. That's an organization that manages well north of $1 trillion of assets.
Wow.
And their advisors were listening to the case for Bitcoin, Ethereum, and other crypto assets. They were asking questions. They've followed up with us since. I think that kind of activity is going to lead to substantial inflows in 2026. And I will say, those people don't see the crypto market as in a bear market. I know in crypto native land, there's a lot of the fear and greed sentiment is down below 15. People are very sad. People outside of it see crypto in a sustained bull market that's had a natural pullback. They think of this as an opportunity, not a risk. They like the lower prices. And so we're going to continue to do that education to bring more of those people into the fold.
Yeah, Matt, there's this interesting dichotomy to your point. TradFi is moving at a rapid pace, adopting crypto, building different products, launching stablecoins, custody, tokenization. Yet, crypto native, if you go to on crypto Twitter, it it feels brutal out there, Matt. It's like everybody's in depression.
So true. Yeah. I mean, it's hard to operate as a TradFi focused sort of crypto educator and then someone who's engaged in Twitter because it really is like living in two different worlds.
Yeah.
And I think that's right if you think about time frame. If you look backwards over any long time frame, crypto has done exceptionally well. Over a short time frame, we're down 33% or whatever from the all-time highs. If you look forward, even amongst crypto natives, and you ask them, where do you think this is going in 10 years? Of course, they all think it's up and to the right. Where do you think it's going in 5 years? Up and to the right. Even a year or two, they're optimistic, but they're very worried about the next 3 months. So I think that difference between how TradFi is viewing it and how crypto Twitter is viewing it is that crypto Twitter is looking through a next 6 weeks phenomenon or eyeglass, and TradFi is looking through a next 6 to 24 month time view. And you just get very different outcomes. Even I am not certain where crypto goes by the end of the year, but I'm very optimistic about where we go in 2026 and 2027. And I think that's the difference that you're feeling there.
Yeah, and I've been trying to tell my listeners and viewers, focus on the macro, just step back. I know it's tough right now. Maybe go out and touch grass and come back, right?
That's right.
You're taking your position, but you got to have the macro view. I think And it seems, though, Matt, I don't know if you agree with me, but as crypto matures and it's become more affected by the macro, it's probably going to break some of these 4-year cycles and things we've known, legacy mindsets, right? And it's going to act a bit different.
Yeah, absolutely. It's the forces that created the 4-year cycle are weaker now than they were in the past, right? The halving supply impact is obviously statistically smaller than it was in previous supply impacts. Interest rates, which went way up in 2018, way up in 2022, are neutral to down this year. And at the same time, you have these massive long-term forces. You have institutional investors moving into the market. That's a 10-year trend. You have a 180 on regulation from headwind to tailwind. That's a 10-year trend. And those are the forces that, to my mind, are going to drive the market forward. I think the 4-year cycle will not repeat. We think 2026 will be an up year for Bitcoin. A lot of people have been asking me, like, what's your boldest prediction for 2026? It's actually that it'll be an up year.
Mm.
And I think that's really important for the direction of where crypto is going.
Yeah, Matt, because when you take into consideration the November, December 2021 timeline, when we started rolling into a bear market, the Fed came out and said, okay, we're doing quantitative tightening, rates are going up. We are at the cusp, Matt. December 1st, they're ending that, and we're on the path to lower rates, right? There's another cut expected in December, if not maybe early next year. You got crypto market structure bill on the horizon. I'm in agreement with you. I feel 2026 is going to be up year.
Yeah, I think you're right. I love those examples. That's the really important one to me because I think one of the biggest drivers of the 18 and 22 pullbacks was that macro environment. It was skyrocketing interest rates, it was quantitative tightening, and we're not just neutral now. The reverse is true. As you mentioned, we're ending QT. Liquidity is refilling the market starting effectively after Thanksgiving. And interest rates, I think, are going down substantially next year as we get a new Fed chair, as we get, people wanting to encourage the economy in an election year. I just think the template is there for lower rates. And I do think the market just can't see past its sort of its nose on these things. I think we're close to a pretty good turning point.
Yeah, it feels like the 4-year cycle has almost become a self-fulfilling prophecy. Everybody has the in the mental timeline set, like, oh yeah, it's 1,060 something days. That means it must go down. But it's like, and they all start selling, and it's like this self-fulfilling prophecy thing happening.
I do think that a lot of the pullback has been people selling ahead of the 4-year cycle, trying to get in front of that. One of the reasons I look toward the year end for a real turning point is you have that coming to an end. You can't front run the 4-year cycle if you're selling in the fourth year. So I think that will wrap up. I also think people are worried about the lingering effects of the October 10th liquidation market. Are there any other sort of wounded parties that are going to rise to the surface as majorly impaired? I think we have to assume that process will also wrap up by year end. That won't linger into 2026. So I think as we turn the calendar year, we're going to have a pretty clean slate with lowering rates, positive regulatory direction, strong institutional adoption, strong growth of stablecoins and tokenization, growth of prediction markets in other areas. I think that's a pretty exciting mix, starting to see some green shoots in the market that make me pretty happy.
Oh, absolutely. I did want to get your thoughts on digital asset treasuries and ETFs. You have these two running in parallel. Digital asset treasury companies are feeling more pressure because, they're leveraged up and they're doing a lot of different things. I'm a big believer in companies holding Bitcoin and these assets on their balance sheet. Whether they should raise obscene amounts of debt to do that, I'm not sure. I'm not on that boat, but if they take some of their cash reserves. So I'm curious what your thoughts are on the state of digital asset treasuries and how they may, compete with ETFs.
Yeah, sure. I mean, first of all, it's worth noting there are two versions. So there are traditional companies that buy Bitcoin as part of their balance sheet strategy. And that trend is just up and to the right. Those are the Teslas of the world and the Stripes of the world and the Figmas of the world. That has nothing to do with sort of traditional digital asset treasury companies like MicroStrategy and the people who copied MicroStrategy or the same equivalent in other assets like Solana or ETH or many other assets. When you focus on those, I think what we're going to see is pretty obvious. Look, ETFs are sort of the risk-free rate in crypto. You can gain exposure to Bitcoin at a cost of 20 basis points. You can gain exposure to staked Solana at very low cost with 100% of your assets staked. If you're comparing that with a digital asset treasury company that is just doing the same thing as the ETF, the digital asset treasury company will trade at a discount. Why would you lock up your capital and not be guaranteed to be able to get it out at NAV when it's easy to do it? So that means the digital asset treasury companies that want to succeed have to do something harder and more complex. It doesn't mean that there's no role for them.
Right.
It's just mean that if their strategy was just to like be a bad version of an ETF, that's not going to pass muster. I think a thing that happened was before ETFs, you could do that and succeed. It's just ETFs have raised the bar. First, they came to exist. Now they're adding staking. You now have to do something hard, smart, clever, and sustained over time. I think the companies that do that will absolutely be well rewarded and will outperform their underlying asset. And I think companies that fail will dramatically underperform the asset. You're going to see this dispersion of returns between well-run companies and poorly run companies. And that's the way it should be, right? That's the way capitalism works.
Absolutely. Do you think there might be some consolidation where some of the ones that are well run, they acquire the ones that are failing?
100%, because the well-run ones want to increase their crypto asset per share. If they can acquire a poorly run one that's trading at a discount to its crypto asset per share, well, then they can increase their crypto asset per share. So I do think there's a natural M&A activity in this space. I think many of people entered this space in the hopes of short-term riches. That's not going to happen, right? You're going to need well-run, tightly run companies with liquidity and leverage that can do many things, including M&A activity to increase their crypto per share. But again, I think there'll be some winners. So if all DATs traded down to a discount to NAV, I would be looking for the best DATs as a real opportunity. You just have to evaluate them the way you would evaluate any other company. They need to keep costs reasonable. They need to execute well. They need to manage risk. It's just like any other company. And I think people need to realize that that's what these are. They're companies. They're not quasi ETFs. They're companies that need to execute well.
Yeah, well said. Speaking of M&A, one of the things I had in mind, I don't know if you agree here, but once the market structure bill is passed into law and there's clarity, across the United States, what you can and can't do, what are the guardrails, could we see M&A skyrocket? Maybe some of the TradFi folks, the banks say, you know what, I don't want to build out all these crypto infrastructure items. I'm going to go buy these crypto native firms. You think we might see things like that?
Yeah, I think you'll definitely see that. I think that's going to be a natural response because you sort of have the regulators starting a race, like shooting a gun off to start a track race. And some companies will choose to build and some companies will choose to buy. I think you'll start to see that next year. The Genius Act goes into effect in January of 2027, right? So next year is the building year for companies that are looking to enter that space. Some may choose to do it via acquisition. The same is true for tokenization. Right now is the time to build before the regulatory gun really goes off and you can operate at scale. So I think that will be true. Maybe the thing people aren't looking at, two things in M&A I'll call out for you, Tony. I think crypto wallets are going to be attractive M&A targets because that's a way to connect with crypto customers, which is one of the hardest things to find. So I think that's a particularly valuable area I would keep an eye on. And then I think the reverse is also true, which is large-scale crypto companies may acquire firms in the traditional space as those two places merge. I'm not sure it's one direction. I think it may be bilateral, and maybe people aren't considering that bilateral approach, but I think you'll see that in the next year or two as well.
That's such a great point. The opposite happening. And we're seeing a bit of that. The one that comes to mind is Ripple and Hidden Road and things like that.
Exactly right. Yeah, I think Ripple has been at the forefront of this, right? If you imagine that the two worlds are coming together, it doesn't have to be the case that it's only coming from this direction, right? We think in crypto that crypto is going to disrupt TradFi. Well, if that's true, we should be buying them, right?
Yeah.
And we should be co-opting their customers and giving them a better experience with new tools and lower costs and all of those things. Those customers aren't necessarily easily going to migrate directly to crypto unaided, but you're starting to see it. You mentioned XRP. Sort of on the bubble of this is some of the acquisition activity we've seen out of firms like Robinhood, which is a quasi crypto company sort of straddling that border. I think you could see more and more of this over time.
Matt, I think I have to pinch myself thinking, what you mentioned, crypto acquiring TradFi companies. We couldn't even dream of that years ago.
That's
It-
absolutely true. Yeah, look how far we've come. But we now have many very large companies in this space, right? Coinbase is a giant company. Kraken just raised at a $20 billion valuation.
Mm,
These are big dogs, right? They are out in the market competing even with other traditional finance companies, right? I mean, the old joke is that Tether makes more money than Goldman Sachs,
yeah.
which is funny, but also true, and means that these are big world changing enterprises. So it can go both direction. We saw this in the internet era, right? We saw the largest internet companies actually eventually acquire some TradFi companies. Some of those deals ended well, some of those ended questionably. The AOL Time Warner deal comes to mind. But
Yeah.
right, we are of that scale. We are an emergent industry and playing at the big boys table.
You mentioned Kraken. I know there's a lot of IPOs and folks looking to go public, Securitize and others. So that's also like a signal that going back to the theme of 2026, expecting to be an up year, as opposed to what the herd right now is thinking is the opposite is going to happen.
Yeah, I think that's absolutely right. Look, I think we're going to see multiple IPOs, right? Again, the IPOs have been suppressed. Another thing to think about in 2026 is the crypto market was suppressed generally by regulation.
Mm,
And there were these things that were held down over time. And we're starting to see those emerge. Examples are like the growth of stablecoins, the growth of tokenization, prediction markets were held down, IPOs were held down, ICOs were held down. And we're starting to see all of these things bounce back really fast. And I think people probably underestimate how big those bounces will be. We just had Coinbase just did the Monad ICO,
yeah.
right? That was the first major ICO in recent memory. There will probably be 20 of those next year, right?
Mm.
That raise hundreds of millions of dollars and are really important. I do think you have to think the market has been suppressed so long from a regulatory perspective that anything that has had that lid come off, whether it's ICOs, IPOs, M&A, et cetera, you're going to get more than normal activity in the next year under this better regulatory climate.
Oh, yeah. I'm excited. Matt, as always, great insights. Thank you so much. At some point, we're going to have to figure out to do one in person in New York in my studio.
We've gotten so close. I
Yeah.
know it's hard to, maybe we'll make that a resolution for 2026. We'll make it happen.
Absolutely. Well, enjoy your Turkey Day, and excited to see the results for Dogecoins or your Dogecoin ETF today. But thank you so much for joining me.
Yeah, thanks for having me. Excited to be here.